My whole being hurts every time I have to spend ETH, and ETH is the thing that, like, I have to spend Ether all the time, almost every day, and yet sometimes this is just like a sort of.
Why do you have to spend?
Because I have to buy these fucking JPEGs, man.
Yo, take out a loan on Aave like a real man. Put your ETH down and just borrow more ETH.
That sounds.
You just told me the other day, real men don't
Financial
take loans
advice,
or use leverage. You just said just two hot takes in one. Look, the thing is, like, I constantly feel I hate spending it, and even though I know it's not intended to be like Bitcoin, it feels like spending Bitcoin every time. It feels like I'm taking this wonderful, incredible store of value that everything is going to bleed against and spending it on stupid things.
If you think that's the case,
and I gamble.
Yeah, like if you're not really confident enough to like borrow ETH against your ETH to buy JPEGs,
I'm sort of
shouldn't
making
be
fun
spending
of
it in the first place, you know?
I'm sort of making fun of myself to illustrate a point. That's what I'm trying to do here. It's like so many of us continually, perpetually keep doing that, when in reality, like the better play is probably just stack and don't touch it.
It just depends how good you are. It's a lot of man.
The
some of the
DeFi
stories
Lord.
about these NFTs. Dude, God, I saw the story somewhere about this. Like, actually, my buddy told me about it. This like NFT trader who went from buying ETH with his unemployment checks to running it up to $20 million trading NFTs.
I mean,
he was just getting his COVID. He was just flipping all of his COVID unemployment into ETH, and then he parlayed that.
What a beast!
Into NFTs, and then just started flipping, and then he's got 20 mil.
But this is absurd. Like, something like this should make us like just stop and go, what the fuck? What do you mean? How is that possible? But we hear these stories every day, and that is insane that it exists in this market. Like, this opportunity, but
it doesn't. It probably doesn't exist anymore, and I think that's like an important point. It existed at a time where nobody was sitting here at a podcast like this talking about how amazing ETH was. The opportunity existed because ETH was $80 and everybody was talking about how it was going to zero. Right. So those are the environments where you make 1000x gains. Right. So everybody coming into the market
was just 2 weeks ago.
You know.
Yeah. I beg to differ on that. I think it's like we have no idea what is ahead and what is possible in terms of thousands.
We have a general idea, right? Like if we can make broad assumptions about the crypto market and about the majors and like where we are
talk
in the
about
cycle, you know, Wolf Game.
Sure.
Can we dive into that one?
It's sort of like a new iteration on NFTs. I think that it brought a new element into it in a world where, like, in an NFT world where there is no new innovation, like they did something new for once.
We should just talk about, I think like,
they
NFT
actually
games
went
in general, I think, right?
Yeah, look, they created a new standard. They created a 5 token game. Like, they combined coin, ERC. Like, I don't know. I just think, like, you have wool, you have the sheep, you have the wolf, you have goddamn, what was the
land, the farmer, the
yeah, the farmer and the land. 5 token system, and you created like something in that game with like that went so far beyond anything that was in the realm of, like, I know there were other P to E, play to earn games, but I just don't think that anybody was able to get adoption across the industry as a whole like Wolf Game did. I know we're talking specifics, but
would you consider Wolf Game to be a play to earn, Nick?
I think it's like a casino.
We're playing like fast and loose with play to earn, I think.
Yeah. I mean, like, Axie Infinity is like a pure play to earn, but like, you were,
I think everybody
playing
refers
and gambling to earn, I guess. But like, I think the blurring of the lines comes in that he had like a risk protocol essentially, right? Like 2 smart contracts or NFTs, one could probabilistically steal from the other. And that was new. It's like, whoa, there's some game theory.
Should we give people context on what the hell Wolf Game is?
Well, yeah, you brought it up to us, so you might as well give a quick breakdown of it. Like,
oh wow, I almost forgot that.
Yeah.
Here,
you dropped the alfalfa in the chat. That is for sure. I guess do it, Steven. I mean, you
I'm doing it. Okay, so for anybody who doesn't know what Wolf Game is Wolf Game is, I'm just gonna say it, it's an elaborate Ponzi scheme packaged up in a way where it's just like really fun to participate in the Ponzi scheme, right?
Right.
So it's sort of blurring the line on what is a Ponzi and what is a game and what is just like utility, right? Like we all play blackjack and we play craps, and like those are losing endeavors, right? And people are like, those have no value to society, blah, 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 blah. But a lot of people say like, no, they do have value, because even though you're a guaranteed loser, the entertainment is worth the price of admission, and it's so fun, right? So it kind of blurs the line. But so Wolf Game is an NFT project where the NFTs can sort of be staked and like earn you a token called Wool, which could actually be sold for like real ether. And it sort of takes a bunch of mechanics from DeFi, right, and repackages them into NFTs. The concept of staking a token and earning more tokens for free, quote unquote, depending on where you get in, it's highly addictive. So you could buy a sheep and you could stake your sheep in the barn, and that sheep would produce you like 20,000 wool tokens a day. And then you could suddenly sell those wool tokens for 20 cents a pop. And then people were like, wait a minute, my sheep is producing $4,000 a day. I guess the sheep is worth $15,000 now. And then, the market started going ham. And then the game had this other interesting element to it that I hadn't seen before in an NFT game, which is that it had this other token, the wolf or NFT. Mm-hmm. And, the wolf interacted with the sheep, and that it could like steal sheep and steal wool. So it sort of was not like a pure Ponzi scheme, in that there was, it's like a gambling game that is solvable, but that nobody has solved yet. In the long run, that game is sort of zero EV. And, it's just sort of who gets in first and gets out of the Ponzi, and it relies on new money perpetually coming in before it collapses, right? Right. But you could certainly argue that in Wolf Game, it was sort of like being the first person to play poker or to play blackjack or something, and the casino didn't know how to play blackjack against you yet, and everybody was just figuring the rules out. And that was certainly the case. Like people were definitely making decisions in Wolf Game with how they played the game, quote unquote, via what they bought, what they sold, when they staked, when they unstaked, that were definitely suboptimal. So you were definitely playing that game if you were sharp and you understood the tokenomics of it and how it played out. You were definitely making money. Now, right. I expect like all other innovations in the crypto space, this is going to get, already has gotten knocked off 1,000 times. Everybody's going to get good at playing with the Wolf Games, and they will return progressively less and less and less over time as people's strategies become kind of more, game theoretic optimal. And then eventually they will just sort of devolve into pure Ponzi's, right? But the line could still get blurred, right? Like if this like anonymous shepherd guy who runs the game is able to actually produce like a game from this that people wants to play, should just play the game, or at least partially to play the game and not purely to earn, then you can kind of, cross the chasm there and argue that it's not a Ponzi anymore. Like people want to play the game, and that in and of itself has utility. And because people wants to play the game, it will create demand for the wool token, which will give it economic value, which will stabilize the price, right? So like it is possible that these things could evolve to be like actual sustainable things. People obviously should just like have open eyes that they're probably just really fun Ponzi schemes that they may in fact have an edge on in the short run, right? I don't want to say you don't have an edge, but like to think that like you can just like stake virtual sheep and print money forever with no other options is obviously silly. But like I personally am like really excited by these things, also terrified, right? They're going to be like crack cocaine to people. People love to gamble and they love NFTs and they love to play games. And like once we start getting these things on like the layer 2s where the gas is really cheap and it doesn't cost $4,000 to play the game, like I could really see stuff like this taking off like wildfire. And I can see people creating some really crazy elaborate games, and I can definitely see people losing like a lot of money and bringing the wrath of the regulators down for sure. And it's going to be quite the wild ride. And I'm sure in the meantime, some people will make like tons of money and some people will like, obviously lose money. It is sort of zero sum at the end of the day. It's a negative sum when you factor in the enormous transaction costs and the enormous cost of gas currently. It's the thing I think a lot of people don't factor into NFTs, like the the slippage in the gas is like,
yeah,
it's absolutely insane. You have to have like a huge edge to actually make money, which a lot of people do because it is inefficient. But like, holy shit, it's the Wild West right now for sure.
I think if these games like continue to provide utility, they can transition from like you're saying, like a Ponzi game into like a real game, like just in the casino, kind of like your analogy. Yeah. Like you can take your chips and go to the roulette table and then take your chips there and go play blackjack and then go to the craps table. Like as long as they create more utility for that token, it could do really well. And like it maybe the playbook, the Wolf Game playbook is a good like startup, kind of like crowdfunding for a game and a way to like, distribute tokens to people and then add utility and then, the game starts.
Yeah, that's a good take. That's like a really interesting way to raise money for a game, to build a community.
And distribute without a token sale too, which, could instantly constitute you as a security. So like, hey, here's this thing, stake it. You're going to get tokens. You don't know what they're used for yet, but like, trust me, kind of thing. And that's basically what he's saying. He's like, trust me, you're gonna really like what you can use wool on. It's like, okay, like I'm willing to ride down this path with you and see what it is.
I mean, maybe you're right. Maybe NFTs are just some backdoor around securities laws if you do them this way.
Why would you
like,
say
oh,
that?
you're not.
So I haven't played the risky or safe game yet. Have you guys selected already?
Oh, it looked like it's going to expire soon, right?
Yeah, it seemed like it was pretty clear, positive EV to always go.
Well, you obviously should play the risky game unless you're a huge nit.
So this is a good test though. So like to see how degenerate people actually are. So like essentially the Wolf Game broke and the sheep stopped earning wool and he needed to do some kind of migration, whatever. It came to a breaking point in the game where now you're at the point where you can keep 80% of the wool that your sheep has earned, or you can play risky game and basically have a coin flip for potentially much larger amount of wool or nothing. And so I'm really curious to see how many people play it because it'll just tell you how degenerate people
on a side note, I played the game and I can't figure out how much wool I got.
Do they give you the results right away?
No, you won't know until the time period's up.
Oh, okay.
Okay.
Yeah. But to your point,
the wolves find out how much.
This is a good example of like why these games can actually be plus EV, right? Like it's clearly positive expected value for people to just play the game and gamble, and then everybody who doesn't play the game basically just gives like a 20% rake to all the people who play. They
subsidize, yeah.
So there is like a blurry line and like what is a game and what is a Ponzi and what it's like, and I think those lines are going to keep getting.
And whether you're the house, it's going to be in the casino game, sometimes you might actually be the house in some of these scenarios.
Nick, I'm curious how you've been playing this and like your whole take on this. I know you look at these things on such a incredibly like nuanced level in terms of how you play anything. You're really funny like that, where you are willing to gamble and play the games necessary, but the level of thought you put into your decisions is probably in the 99th percentile of anybody. But yet you love to gamble, you love to play, you love to play the game. So like, how are you playing this?
Well, I mean, I think it's we have like a little benefit because we get to bounce some ideas off of the thread and gang up on Excel spreadsheets on whether this thing is really positive EV or not. I mean, I kind of sold most of the assets leading up into that peak we were talking about on the phone, so I kind of cashed out most of it, but I did take a lot of the profits and buy land. And basically, it's like a bet that this thing will actually have utility, and there will be some kind of activity. When you look at the volume of the game itself, it's actually pretty ridiculously high. And at these decision points, the volume of the game like escalates. And so if you think about the future of the game, if the future of the game exists on land, the main concept of land is that maybe it takes some kind of tax on all the economic activity. So I'm basically betting that not whether people are going to make money or lose money, but that there's going to be like a ton of activity, right? There's going to be a ton of like back and forth, and hopefully, landowners, and it sounds so silly that we're even talking about this, but the landowners make a good amount of money because, there's people losing and winning, but regardless, you're taking a rake on all of it. So I'm trying to bet that basically high trading volume in the game, because these guys are creating really good these game theory decision points to play with. So
I just calculated it, and it's literally the exact same EV either way for me.
That can't be true. There's a tax. There's a tax when you don't play the game.
Oh, I'm not taking into account the tax. It would be the exact
20%.
That's 20% lower going safe. Okay.
It's quite the hefty tax. I mean,
it's not that bad.
To your point, Nick, this is obviously getting a little in the wolf game weeds, right? I think that land was trading at like 0.15 at one point, and sheep were trading at like 0.45. And if you're like long-term bullish on the game at all in the slightest, that seems like an obvious mispricing, right? Because there's supposed to be like 80, 90,000 sheep, and there's like way fewer parcels of land. So the idea that like a sheep would be worth like 3 or 4 times the land in the game,
which by the way, guys, like the game that is actually like doing more volume right now is the Wizard game. So
yes. Did any of you guys do the Wizard game?
No,
I did Bear
Wizards. I did Bear game, and my bear just ate
I heard
itself.
Bear game was not good.
It was
bad. It was bad.
Yeah, but we have 2 million salmon. I don't know what that means, but we have it. So consolation prize.
So actually, so honestly, I think this is an important thing to just highlight. Like, one resulted in some of our friends making 6, even I think 1 or 2 made 7 figures. Okay.
It was like a straight up like 100x, like if you timed the game well.
Yeah.
It was pretty crazy, it was pretty nutty.
And on the surface, and the one I'm referring to is Wolf Game, and the other was Bear Game. And I wouldn't necessarily call it like a rug pull, but
soft
shit
rug?
hit the fan. Yeah, soft rug. That's fair.
I think it was like built-in
term.
rug.
Soft rug.
It was built. It was built-in negligent rug.
Oh, yeah.
Didn't fix any of the vulnerabilities.
That's a soft rug in my book.
It's a soft rug. And so I think just like when you're looking at this outside looking in, and you're like, wait a second, like your first exposure to this whole space is like, I told you guys, I think I texted you guys, like I got multiple texts about Wolf Game. Very smart people who I even sent you guys like screenshots of, like, and some of you know them, and they're wanting to take the first step, and they're wanting to get into this game. And that could have been Bear Game or Wizard Game or whatever the fuck game. And they could have had a terrible experience, or they could have had a great experience. The difference, what I'm driving at, is the difference between all of these things. And right now we're just touching on these Ponzi games, to Steven's point, within the NFT space. On the surface, it's impossible, unless you can actually go into a technical level of analysis and understand the smart contracts and look at the code, to understand what's really going on here. For the 99% of people, we're gonna get typically fucked,
or just
because we mistime it, or you mint this thing. And most of the people in our world minted this thing and won, because it is, in my opinion, please correct me if I'm wrong, it's kind of difficult to lose when you're minting one of these things. Like, it's a negligible cost to me. I'm like, whatever.
It depends on the project for sure.
I don't mind paying 0.069 or whatever it is to learn a lesson. In other words,
if you're minting something that rapidly sells out, the indication is that demand is far in excess of the mint price, and you'll probably, at least in the short term, make money. And the reason we were able to mint this one was because it was like a stealth launch, and like I had like a tip off about it from like a very knowledgeable friend of mine. And beyond like the technicals of the game, right? Like when you do NFTs, like it is really important for people to realize that there are like a lot of like connected insiders in the space who are getting inside information and having tip-offs that so-and-so is minting this, so-and-so is going to play this game, so-and-so is going to like shill this NFT, right? So you have to understand where you are on the informational totem pole, right? And if you're not, towards the bottom of it, if you're not getting like firsthand info, then you can still do NFTs and play. You just have to understand that there's more risk, and you might want to like take profits earlier. You might not be as early as you think you are.
Ponzi's reward early guys.
So there's a take that came out by Bloomberg that just got absolutely like lit up in crypto
this?
Twitter. So small group of insiders is reaping most of the gains on NFTs. Study shows highly sophisticated investors get most of the NFT profits. Study Chain Analysis report says early access via whitelist helps. Duh. Duh.
I also have a problem with that second headline. Like, you can apply that second headline to anything in any sort of markets.
So I do,
highly
to your point, Stephen,
get most of VC gains.
I do have a problem with this entire narrative being pushed by this article, but did you not just say something that is kind of in line with it, in that insider, that's what just pushed me to pull up this article. Like, you just used the word insider. So I am playing devil's advocate here.
Yeah. Well, I don't think you're playing devil's advocate. You're just saying, you're just validating what I said.
You're echoing.
I think what I said is like true. Am I echoing?
No, I'm saying Armand's echoing your point.
Oh, okay. I thought this mic was pretty good, but
yeah, I am echoing.
I think these this wolf game example though will have some like longer term takeaways. I do think there's something really interesting for bootstrapping utility. I think it's like a good formula for it. Like Gala Games uses it. They have like a thing called a founders node where you buy the founders node. It puts off some set of tokens and you can use those tokens to buy more Gala nodes. And then you can use it eventually like more utility in the game. And I think like that formula is right for using in other projects. And then like how much you can just like have fun putting game theory and gambling and like these different risk protocols and the probabilistic nature of smart contracts, the way they interact with each other is really interesting. And just how crypto gaming too will pull people in very easily than some moon coin or whatever.
I feel like we're issuing sort of like a PSA to NFT buyers, but like there probably should be one. And then like I love NFTs and I'm like super bullish on them on like the macro perspective, but like people need to understand like NFTs are so different from like buying like a random stock or like buying Bitcoin, right? Like if you buy Bitcoin, the price of Bitcoin is like set by the market. If you buy like a random stock, the price of the stock is set by the market, right? And if you need to get out, you have liquidity, right? Like NFTs are totally different. Like the price you buy an NFT at could be so easily manipulated. The float on these things is very, 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 very small. So the other edge of this coin is that if you're like a really savvy investor, you can get an enormous edge trading NFTs, right? You can make tons of money trading NFTs if you know what you're doing, right? So there's basically no edge one way or the other for anybody buying Bitcoin. You just throw a dart at a wall, you buy Bitcoin, and that's it, right? But NFTs are totally different, right? You can't necessarily just randomly buy NFTs. There's a lot that goes into them in determining whether you are or aren't profitable. It's a million variables. It's much more complicated. And when you make the wrong decisions, you can't get out, right? So I do worry a lot of people are going to get into NFTs because they're like really, really popular and they are fun and they are like super interesting. And I totally understand why people do them and love them. But it also is like really dangerous. Like if you are approaching them from like a I need to make money perspective with money that you can't like afford to lose, like you can definitely get wrecked because they can be manipulated super easily. Inside information is super, super critical. You can gain huge edges doing things like using wallet tracking services like Nansen AI and all these other, there's so many things that like a somewhat savvy investor can do to get a huge edge in the NFT marketplace. That's the equivalent that doesn't really exist in like Bitcoin or traditional stocks. But that means that in this game, which is basically zero sum, that the passive people are getting more wrecked than they might be in like a normal market, you know, unless you're buying like a really established project.
I will sign that Alfalfa PSA. Yeah. I think that's a really important one, for sure. And I think it's unfortunate because it is the entry point for so many people, and it is a really fun and exciting space, and probably the way that most people will get involved at least in our like age bracket / generation. But do it for the right reasons. Like, I just think like most people are coming into this for the money, especially with NFTs. I think if you're trying to make money, buy the coins, like buy Bitcoin, buy Ethereum. Like, it doesn't make sense to me to try to flip NFTs, because unless you are a very sophisticated trader, it's very difficult to find that edge, and most likely you're going to get fucked.
Most likely. But yeah, it's like I mean, but everybody thinks they're a good trader, or, you know, whatever that means in NFTs, and that's the problem. Like, I will say, like, objectively speaking, like, if you want to put in the grind work and you are good and you're willing to take some thumps, there's probably nothing that can give you like an edge like NFTs can give you. And like most people who don't have like experience in traditional markets, like, you don't need to know how to chart or do any of this. Like, it doesn't really matter in NFTs. It's a highly socially driven thing. It's about being well connected and getting into inner circles and like kind of getting access to information that others aren't privy to. And like, it takes time to develop those connections. It's very different from like trading Bitcoin, right? So if that's like what your strength is as a person, then yeah, and you want to make money and you're comfortable with the risks, then yeah, NFTs are cool. But like, if you're just like kind of Joe Schmo, middle of the road, and you're just like, oh, I want to buy NFTs to make money, but you're not putting a lot of work in it, and you're going to get wrecked, right? And the exception would be like if you buy more blue chippy type, like Bored Apes or like CryptoPunks aren't like,
should we buy
massively
CryptoPunks right now?
Manipulated, right? But they
Great
also
question,
cost
Nicholas.
like, yeah, it's a good follow up, right? This is the problem with NFTs though. Like, there's no entry NFTs. You're either playing these lotto ticket mints, or you're spending upwards of like $10,000-$15,000 like just for like an entry into a project that's not like uber manipulated, and you know. But the mints are tricky. Like, the mints are the essence of all the insider stuff and all the shenanigans that go on like right after them, like, right, you know. But they are, so people like the lotto ticket aspect.
We're gonna partner with Bloomberg then. We're doing a 180 on this. I like it. So Nick, do we buy CryptoPunks? Like, there's obviously been a lot of commotion lately with the Creative Commons talk, with the no rights reserve talk, with people wanting the IP here.
Yeah, I mean, makes me feel like we're peak fear. CryptoPunks.
What's the floor right now?
75.
Oh,
75.
back up!
Wow,
Back up.
I mean, we put the average sales price on the chart there, and it looked like it hit
mid-60s yesterday, I think, at one point.
Right, we dipped below what was the equivalent of the like 20-week moving average for like median sales price of punks.
So love charting NFTs.
It's fun. It just gives you like an excuse to choose the decision you were already going to choose anyway. You're like, man, I really want to buy some more. You put on a chart, and like, I can see it in the chart. It works perfectly.
I think there's like some merit to it. I don't think it's a complete meme.
No, it's
for established products,
like
projects.
It's like you see what you want to find typically. I mean, I think the narratives are all against it right now, which makes me want to buy.
Armand, would you rather have 75 ETH or a floor punk?
Ooh, see, that's, I don't know.
Fuck.
75 ETH.
The ETH is so
75
compelling.
ETH. 75 ETH.
Yeah.
Well, you know, punks sell. Like, that's one, like, it's a floor punk. If I need it, if I need the ETH, I can sell it. That's one benefit there. I know most NFTs are illiquid, to Steven's earlier point, and that is something for people to keep in mind. But like, you know, like I owned many NFTs, but I still felt like I didn't have a solid profile pick and a access to the community that I wanted, which was the Bored Ape community. So I was like, all right, Bored Apes, like, can I really justify spending hundreds of thousands of dollars on a Bored Ape? No, not at this point, especially with what I'm seeing with ETH. So Mutant Apes makes equal bakes. Like, all right, that's my entry point. Like, that made sense to me, but I still didn't like it. Like, I didn't like, you know, I just would rather hold ETH in so many ways for so many reasons. But the danger of holding ETH is it's back to that conversation of like, it has this utility, and I am constantly being pulled to spend it on something, whether it's like Botto or You know, it can be anything. It can be anything. It comes up like
You
next.
totally diverged from me. I was with you, and then I was like, yeah, it's got this utility. You can earn interest, and then you're like, you could spend it, and I was like, no.
But that's
I thought you were getting into the opportunity cost.
No, not that kind. Yeah, no, you're talking about good utility.
Yeah.
I'm talking about what pulls us away from the true reason of
Bro,
like,
you just gotta stake it. Just lock it up.
I know.
But imagine if you had imagine if you had $100 million in ETH. Like the 75 ETH doesn't actually matter, but like having the CryptoPunk could matter. You know, could have like more utility, could make you like a somebody in crypto Twitter or something like that, you know?
Which is invaluable to so many people.
Right.
I mean, Nick, Nick, you and Eric have one. Like, yeah.
Yeah, I mean, I can see a future where, like, you know, if you want to target a certain type of person, you know, culture-wise, net worth-wise, whatever, like in the future, like restaurants will be able to airdrop, you know, NFT coupons to, you know, punk holders, and I think like being part of that community will reap benefits long into the future. But I don't know if it's worth, you know, I guess bleeding against ETH over that time period, which it may well do. I hope it doesn't. You know, I really hope it doesn't. But
I think it
will
do
it. The ape floor right now. Is the ape floor like 50 yet?
Like
50 something.
No, a little. Oh, I thought it was a little less. So I look at it this way. I look at it as like forget ETH if you're going to do that. Like forget it completely. Like don't even compare like what ETH does. You're probably going to like assume you're going to bleed against ETH and do it because of yeah, but you do it because of the branding or the brand you want to build around it or the benefits or the access or because you want to attend like Ape Fest. Like you don't do it.
How badly are we bleeding here?
It depends.
For a one-time cost, access, it's like being part of Friends with Benefits or something like that. Like you're paying for access ultimately.
Okay, it's a lot of access. It's expensive access. You're talking about hundreds of thousands of dollars.
Yeah.
So
yeah,
I have a few like hesitations with the current NFT, like a bunch of them, right? And again, like I'm sort of very long-term bullish on the general idea of NFTs. So there's like a few things here. One, and I think a lot of people have talked about this, is that like, are NFTs really just purely priced in ETH, or do they have some tie to like real world dollars, right? In a world of like $40,000 Ethereum, which I think we will get to, is a Bored Ape at 50 ETH really going to trade for $2 million US?
You're making a very good point.
That's one.
I don't think
right?
so.
And that's like a very primary concern to me, right? The next thing is like, I go, okay, like what are people buying NFTs doing? Like they're sort of like, they're flexing, they're paying for access to like gated communities and that sort of thing, right? Or buying art. And then I try to look at like comps in the real world that approach that, right? Like the cost of a Bored Ape is more than like the initiation fee at like the most exclusive country clubs like in town. It might even be more than the initiation fee at like LA country. Like there's like so many, right? So, and sure, we're making up some of these arguments for why that's rational. And I think to some degree, some of these arguments are rational. There is the argument that like NFTs are better than art on your wall in your home because like the art on your Twitter profile gets viewed like 10,000 times more than the art on your wall. And I think that is like valid, right? But I don't know if the way that humans are paying for status is going to really dissociate that much from what we do in the real world. So that's like another worry I have. The other worry I have like a number of these worries, so I'll just keep going here. Another worry I have is that NFTs are just inherently inflationary. There's no limit on the amount of profile pics people can make, right? And I do think there's tremendous demand for profile pics. You know, I think that's like a thing people want. I totally get why people want to buy that, belong to a community and flex and everything. But like, I think the fact that there's just this like extreme bifurcation right now where there's just like one or two like really premium projects and everything else is just like dog shit basically. Like I wouldn't really want to own anything other than an ape or a punk, right, as a profile pic project, to be spoken as a guy with a penguin as his profile picture. But but like for the long term, like that's like I don't even know if I'm like comfortable with those long term, right? But as more of the like, maybe people are just paying $200K for an ape just because there are no better options. Like, what the hell else are you gonna flex like a creature as like your profile pic? I don't know. It seems kind of dumb. I think everything else is just kind of dumb. But like, what if 10 other like really cool projects come out and they gain a bunch of traction? Like, aren't they gonna like eat into some of that ape share, right? And then there's also this weird mechanic right now where NFTs have this like insane demand and people want to participate in them, but they have this sort of like step function built into them because gas and minting is so high, right? Like it could be that the fair market for the vast majority of these NFTs is like 0.01 ETH. But it makes no rational sense to have an asset that trades at 0.01 ETH when it costs 0.03 ETH to trade and mint it. Doesn't make any sense. So what we end up with are these lotto tickets that bifurcate into like extreme value or just go to zero. And maybe in a world where like everything is like much cheaper to mint, there's this like smoother distribution of like NFT prices and that like kind of pulls stuff at the top down a little bit. I don't know if that'll extend all the way to punks, but I could certainly see it extending to apes. And I'm not trying to hate on apes. And I tried to buy an ape like a few weeks ago, and I think it's cool, and I think it's potential. There's just a ton of risk there, and I just don't know. Like it seems very high probability that we're looking back in 10 years, like even if apes double again and ETH doubles in price, we're gonna be like, you remember when people were spending $2.5 million for like a picture of like a monkey? You know, and we might it's so funny how these things seem so dumb and obvious in retrospect, and in the present moment we all like convince ourselves that it's like normal, and it's such a fine line between like new paradigm and like just complete stupidity, right?
So speaking of that, I feel like Eric, you have like very clear sort of like, you know, I don't even know what to call it. You probably have a better word for it, but I feel like it's like just general like inner principles on your stance on this. You're not one to get like pulled into the waves of FOMO so easily like other people. And maybe it's because of your crypto CFA sort of like background and the way you look at these things. But I don't know. I mean, like we've talked about it a little bit, but like, how do you avoid the FOMO of going into these realms of so-called like opportunity of like you want the profile picture, you participate, by the way, you have a CryptoPunk, but like you have this like threshold of like limiting yourself and like controlling yourself. How do you do that, and what's your thinking?
I think that's what you said is a big part of it. I have a CryptoPunk already. I don't want like to get overexposed. Like already having CryptoPunk is so much exposure to these stupid ass JPEGs that like when people are trying to do more and more, it's like I got enough. I got plenty. So you know, we still do it for fun here and there, but I'm not minting 65 sheep. You know, I got 3 things and got a wolf. You know, and get out of there.
Yep.
That's very hard to do for most
yeah,
people.
no kidding. And honestly, you know, getting only 3 sheep and a wolf was actually the worst move of my life. Could have made way more money.
I think it's a.
But you also don't have a problem with that. You're never one to be like, oh fuck, like I missed out. I should have had more. Like I sold too early. Like I've never heard you say that.
Well,
You're like, great, I made money.
Generated more ETH out of it. So I'm maximizing for coins. You get more ETH over time. That's a good place. I think that's where I want to be.
That's your game. I think that's a very wise game. Yeah, for sure. Nick,
coins. Stack them up.
More coins is the game. But I mean, it really, I think Steven, like the way you laid that out, by the way, was, I needed to hear that personally. That was really good. Thank you.
They may age terribly in like 6 months.
Lot of concerns, but really well laid out. It's a lot of concerns, but very valid concerns. And also like the PSA part is, I think, like really truly important when you're stepping into this, because for most people that is their first exposure to any of this.
It's their first exposure in general to an asset that doesn't have exit liquidity, right? Like you're used to buying a stock, and when the stock goes down, you can always sell it, right? NFTs, like, and this hasn't really happened. I mean, it's sort of, we had like a mini bear, I guess. Art blocks got pretty wrecked, but like stuff can go like zero bid, and that's just over. Like, and it's just everybody like undercutting each other for months or years, just trying to get out, and there's no liquidity and there's no bidders. That would be like a horrible feeling to have. So anybody buying this stuff should like ask them what it would feel like if all of their shit just went zero bid tomorrow. And if it would feel like really bad, then like sell, pare back a little bit of risk, because it's like it's definitely a possibility.
I should probably like mention this because it's a really good example. So my first exposure to NFTs was So Rare. Okay. And So Rare is a really interesting concept, but they're NFTs of soccer players, football, right? European soccer. Each player is essentially an NFT. There's a limited supply of them. There's different levels of them. Some of them are unique one of ones. Some of them are one of 100 or one of 1,000. My entry point into this was at an all-time high in ETH terms, okay? And luckily, I didn't use ETH to get in. I used dollars. And when I got in, let's just say, for example, just to give you guys like dollar and ETH terms here, like I spent, for example, on like a Neymar, I think I spent 7 ETH in March. In total, I spent $100,000. I called this my $100,000 experiment. And it's a fucking crazy experiment for a person new to NFTs. Yeah. Right. It's a crazy experiment. I would never, by the way, this is not financial advice. You should never blah, blah, blah. Like all of that. Like this was the craziest thing I've ever done in my life. For me in particular, that has a very low risk tolerance, doesn't gamble, doesn't even like casinos, doesn't do any of that stuff. But I wanted to learn, and I had conviction in this. Long story short, not only did it bleed against ETH tremendously, but like I'm just lucky that I actually came in with dollars, because selling in ETH on the platform got me out in dollar equivalent equal to the dollars I put in.
Nice.
So I'm very lucky. I'm very lucky. Yeah, thank God that my $100,000 experiment didn't go to zero. But can you imagine if I'd bought the Neymar for which I bought at 7 ETH, sold for 1.6, bought the, and I don't even need to go through all the player names, but I think I sold most of them for approximately 20% of what I bought them.
But ETH ripped.
That's right. That would have been devastating if I had actually used my ETH to do that.
Optimize for coins, always.
Optimize for coins.
Yeah. And maybe this is something to maybe end on, or like the topic at least. But I think the key is that, we all want to like 10x in the short term, right? We all want to make, a fat return in the next year or two. But I think what we really don't want to do is miss out the clear potential 100x over the next 10 years, right? Like it would be stupid of us to chase these like 10x's every single year that come up, but you miss the like macro 100x that's like clear in front of you right now, staring you in the face. So I think, play, test, experiment, but like make sure you're always moving towards that like longer term thesis, which is, rare that like, at least for us in our 30s, we get a chance to like see that opportunity clear in front of us and take advantage of it, so I just that's what I keep reminding myself. Like I really do not want to miss that 10-year 100x or whatever, which is, or even if it's a 10x, whatever, 100% annual return, still sounds good to me. So
yeah, I mean, that's a good point for people to keep in mind who are coming into the market now. Like it's like a generalized sort of meme in crypto that like you don't really make it in your first cycle. and you should be very, very like liberal with like taking profits. And like if you're trading, right, if you're just buying Bitcoin, then just never sell it. It's like, I feel like it doesn't make any sense to sell Bitcoin. It's not like that volatile. The tax implications, especially in California, are like awful, and you should be investing with like a multi-decade time horizon, right? If you're buying like Solana, like, yeah, I get why you might not be buying that for the next 40 years or something, and maybe you want to sell it, and it's a sort of different story, right? But generally speaking, in your first cycle, if it's like your first foray into crypto and you're trading, like you're trying to run stuff up, you're gambling, you're not like long-term investing that portion of your portfolio, like you are not at the point in the cycle where you should be like getting super aggressive. Like, yes, ETH could theoretically 5x from here. I don't think it will, you know, like I'm personally going to be really happy with like another double up, you know, over the next year or two, which is pretty conservative in crypto land because Bitcoin has annualized returns of like 177%, I think. And you can certainly get like higher returns than that if the cycle goes on, like going farther out down the risk curve. But it's very hard to sell like when things are going up. This is true in NFTs. It's true in everything. But you have to keep that in the back of your mind. Like if you're making money and you're new and you're not in like Bitcoin and Ethereum, you're probably just getting lucky to a degree. You probably should be aware of that. You should take some money. And even if you miss part of the gains, like it's way better to just survive till the next go around and to have like the cash to like buy blood when everybody's like dying in the streets again. There's no worse feeling in the world than bag holding everything all the way down like 90%. You have no cash to redeploy. It's just like terrible. So, you know, have some humility about like your abilities and where you're coming in, and just, you know, be careful. Like if you think it's going to triple, you know, sell when it goes 1.5x, or sell a little bit the entirety of the way up, even though it doesn't seem like a lot at the time. Like it will, you know, feel good in the end when and if things like totally tank on you. And again, this is not like trading Bitcoin, Ethereum advice. I think people not financial advice, but I think like stuff like that, like you probably should just be holding forever. I just know that people out there want to gamble. They want to buy Shiba Inu. They want to buy all this dumb shit and try to like 100x. And that's fine. Like if that's what you want to do, it's free country. You can do what you want with your money, especially if it's like a small amount. But like, don't get caught bag holding. You're not early. You're not early for this cycle. You're definitely not early with like, you know, shit coins and meme coins, you know. And that's my piece.
I like it. Anyone have anything to add? I think that's a good place to tie the bow.
Yeah, me too.
I like it. We did it, boys. We're doing it. We're doing it. One love. That's a wrap. Peace. Join us next time.